Well, ladies and gentlemen, welcome back to Boss Economics World, the only show that takes the dismal science of economics and turns it into a full-blown circus of absurdity. Today, we're diving headfirst into the transatlantic trade tantrum of 2025, where the EU and the US are slugging it out like two toddlers fighting over the last cookie in the jar. Except, this cookie is worth 72 billion euros, or $84 billion for those of you keeping score in freedom units. Spoiler alert, the cookie's crumbling, and we're all getting crumbs in our laps. So, grab your overpriced bourbon, buckle up, and let's break down this economic clown show from point to surface, because, folks, it's a doozy. First up, let's talk about the EU's shiny new hit list, Euro 72 billion worth of American goods that could soon be slapped with retaliatory tariffs faster than you can say, trade war escalation. We're talking Boeing planes, cars, bourbon, machinery, chemicals, medical devices, wines, and even your grandma's favorite plastic Tupperware. Oh, and don't forget the 6 billion euros in agri-food products, because apparently, the EU decided that American apples and whiskey are the real enemies here. This list, my friends, is the EU's way of saying, oh, you want to play tariff hardball, Uncle Sam? Well, two can play that game. Now, let's rewind the tape to see how we got here, shall we? It all started when former president, and apparently part-time economic vigilante, Donald Trump decided to dust off his reciprocal tariff playbook. Back in early 2025, Trump slapped a 20% tariff on most EU goods, with an extra 25% on cars and car parts, because nothing screams, America first, like making German sedans more expensive than a private jet. Then, in a rare moment of restraint, he lowered the universal rate to 10% to allow negotiations. How generous. But wait, there's more. Over the weekend of July 12, 2025, Trump decided negotiations were for losers and announced he'd crank those tariffs up to a whopping 30% by August 1. EU Trade Chief Maros Sefcovic called this move effectively prohibitive, which is diplomatic speak for, are you kidding me, man? Now, folks, let's zoom out and look at the big picture here, because this isn't just about bourbon and BMWs, this is a masterclass in economic self-sabotage. Trade wars, my friends, are the economic equivalent of setting your own house on fire to spite your neighbor. And the data backs this up. According to a 2024 report from the International Monetary Fund, global trade wars could shave off up to 0.8% of global GDP by 2026 if they escalate unchecked. That's $700 billion in lost economic output, enough to buy every person on Earth a fancy new coffee maker, and still have change left over for decaf. But let's get real for a second, behind all this tariff tit for tat are real people getting squeezed. Take American farmers, for example. The EU's 6 billion euro hit on agri-food products isn't just numbers on a spreadsheet, it's apples rotting in orchards, whiskey gathering dust in distilleries, and farmers wondering how they're gonna pay the bills. According to the American Farm Bureau Federation, U.S. agricultural exports to the EU dropped by 14% in the first half of 2025 alone, thanks to earlier rounds of tariffs. And now, with the EU targeting 2 billion euros in fruits and veggies and 1.2 billion euros in booze, those losses could double by year-end. But hey, at least the EU can drown its sorrows in locally sourced wine, right? And it's not just farmers feeling the heat, oh no. Let's talk about Boeing, shall we? The EU's list includes nearly 11 billion euros in aircraft, which is a polite way of saying, hey, Boeing, remember all those planes you were hoping to sell to European airlines? Yeah, good luck with that. According to a 2025 analysis by the Aerospace Industries Association, a 10% tariff on U.S. aircraft could cost Boeing up to $7 billion in lost sales annually, not to mention thousands of jobs in states like Washington and South Carolina. And don't even get me started on the 8 billion euros in cars, because apparently, the EU decided that American SUVs are the perfect punching bag in this trade war. Ford and GM, you might want to start looking for buyers in Asia, because Europe's rolling up the welcome mat. Now, here's where it gets really fun, folks. Because guess who ends up paying for all this tariff nonsense? That's right, you, the consumer. Tariffs are just taxes in disguise, and they have a nasty habit of driving up prices. A 2024 study by the National Bureau of Economic Research found that U.S. tariffs on Chinese goods in 2018-2019 raised consumer prices by an average of 0.4%, costing the average American household $419 a year. Now, fast forward to 2025, and with tariffs flying back and forth across the Atlantic, economists at Goldman Sachs estimate that a full-blown US-EU trade war could push inflation in both regions up by 0.6% by mid-2026. So, enjoy paying more for your French wine, German cars, and American bourbon, because nothing says winning like a $50 bottle of Jack Daniels. Oh, and let's not forget our friends on Wall Street, because nothing gets investors more jittery than the words trade war. Just look at what happened on July 14, 2025, when EU trade ministers met in Brussels to discuss their next steps. The Dow Jones Industrial Average dropped 1.2%, or 512 points, in a single day, as investors panicked over the prospect of a transatlantic tariff showdown. And across the pond, the Euro Stoxx 50 index fell 1.5%, wiping out €78 billion in market value. But hey, at least the hedge fund managers can afford to drown their sorrows in tariff-free champagne, right? Now, let's zoom out even further, because this isn't just about the US and EU, it's about the entire global economy. Trade wars don't happen in a vacuum, folks. When two of the world's largest economies start throwing tariff punches, the shockwaves ripple out to everyone else. Take global supply chains, for example. According to a 2025 report by the World Trade Organization, a 30% tariff escalation between the US and EU could disrupt $1.2 trillion in global trade flows, hitting countries like China, Japan, and Mexico the hardest. And let's not forget the little guys, developing economies that rely on stable trade to grow. The World Bank estimates that a full-blown US-EU trade war could shave 1.1% off GDP growth in low-income countries by 2027. So, congratulations, tariff warriors, you've just made life harder for everyone. But wait, there's more. Let's talk about the real economic issue here, protectionism, the gift that keeps on giving, headaches, that is. Both the US and EU are cloaking their tariff tantrums in the noble language of protecting jobs and defending industries, but let's call it what it is, economic nationalism on steroids. And the data shows it doesn't work. A 2024 study by the Peterson Institute for International Economics found that protectionist policies in the US from 2017-2021 saved just 142,000 jobs in targeted industries, at a cost of $900,000 per job. That's right, folks, for the price of saving one steelworker's job, you could have bought them a yacht instead. Meanwhile, the EU's own protectionist streak, think subsidies for Airbus and tariffs on US tech, has cost European consumers €4 billion a year, according to a 2025 report by the European Central Bank. So, tell me again how this is winning. Now, in a perfect world, the US and EU would sit down, hash out a deal, and end this madness. But let's be real, negotiations are going about as well as a cat-herding convention. EU Trade Chief Maro Sefcovic was set to talk to US Commerce Secretary Howard Lutnick on July 14, 2025, but judging by the rhetoric, it's less mutually beneficial agreement and more mutually assured destruction. And here's the kicker, even if they do strike a deal, the damage is already done. Businesses hate uncertainty, and this tariff tug-of-war has already spooked investment. According to a 2025 survey by the U.S. Chamber of Commerce, 68% of American companies with operations in Europe have delayed or cancelled investments due to trade tensions. Meanwhile, the European Commission estimates that EU firms have shelved €12 billion in US-bound projects. So, congratulations, tariff warriors, you've just scared away the very growth you claim to be protecting. So, what's the solution, you ask? Well, here at Boss Economics World, we don't just point out the clownery, we offer fixes, too. Step 1, ditch the tariffs and embrace free trade. The data is clear, open markets boost growth. A 2024 study by the World Bank found that countries with lower trade barriers grew 1.5% faster on average than protectionist ones. Step 2, invest in workers, not walls. Instead of spending billions on tariff wars, why not retrain workers hit by globalization? The US could take a page from Germany's playbook, where vocational training programs have kept unemployment below 4% despite global competition. And step 3, stop treating trade like a zero-sum game. The US and EU are each other's largest trading partners, with $1.3 trillion in annual trade, according to 2024 data from the Office of the US Trade Representative. Working together, they could set global standards on everything from AI to climate tech. But nah, let's just fight over whiskey and widgets instead. Well, folks, there you have it, the transatlantic trade war of 2025, a masterclass in economic absurdity. From farmers to factories, consumers to corporations, everyone's getting a front row seat to this tariff circus. So, the next time you hear a politician say, tariffs will save us, just remember, the only thing they're saving is a spot in the history books under, what not to do. Until next time, this is Boss Economics World, reminding you to keep your wallets open and your trade borders even wider. Peace out.